Hey guys, Boris, BK Forex. Welcome to the weekly technicals for Eurodollar, Dollar Yen, and Pound Dollar from May 8 to May 12, 2017. And the theme next week, I think, is going to be all the good news is baked in, because we had relatively decent news here at the end of the week, and yet the majors really failed to progress as aggressively as you would have thought they would, given the news that that happened. So let's take a look at the calendar first, and I'll just sort of review the week, and then we'll take a look at next week, which I think is interesting as well. So the interesting thing about this week, of course, is that the non-farms more or less beat their mark as far as the employment change goes. Unemployment rate really now scraping almost bare bottom at this point. The key thing here is wages. Wages were not as strong, although they did match on a month-to-month basis. They were 2.5 against 2.7 eyed, still above the 2% rate, and still effectively in a situation where I think the Fed clearly wants to hike in June. Although my thesis here is that even though the Fed wants to hike in June, it may very well be a situation where they will hike in June specifically just to sort of establish their credibility, but may hold off in September if they don't see considerable improvement on the pricing front. Because the pricing front is still the really big sore point on the U.S. economy. We're just not getting the kind of wage growth or the kind of inflationary growth that really requires further tightening of credit. For that reason, it was interesting that the euro, we'll take a look at it in just one second, the dollar yen really did not progress much beyond its pre-NFP highs. And in fact, it just couldn't even muster a relatively strong rally. So I'll be watching that carefully. Next week, on the U.S. side, really the only report that matters is end of the week, the core retail sales, the CPI. Both of those, by the way, notice, were very weak. We had a negative rate last month, and the retail sales have been just woefully weak. If we get another disappointment, let me show you what this historically what this has shown. If you look at the last, oops, let me just make this a little bit. Let me just go back. Sorry, I was a little too fast. So if you look at the last three prints, the yellow or the gold is what the estimate is, and the blue is the reality. And you see the reality is well below the gold for the last three prints. That suggests the U.S. consumer is just not spending as much as the market thinks they will. And without consumer spending, it's hard to see how the Fed can just go heads on first, raising rates. So I'm very dubious about this sort of very bullish, very hawkish posture of the market towards the dollar. And I think we may be peaking at this point as far as the enthusiasm goes. The market is also betting, of course, on a huge amount of political goodwill. They're looking at the fact that they think that the Trump administration and the Republican Congress are going to be able to pass some sort of a tax cut by the summer. That seems highly unlikely, but hope springs eternal, and I think in many ways those are the things that the market at this point is just simply driving on. It's really not economic fundamentals. It's really political hope and prayer that they are basically trading on. On the European side, of course, we have the Macron election coming up on Sunday. Barring some shocking developments, it's highly unlikely that he will lose. And if he does win, there may be a little bit of a relief rally here. But again, here, the euro basically ran up in anticipation of this whole thing without really making any further highs. It's been trading very well. It's almost at the 110 level. As a matter of fact, it came within a pip or two. You could make an argument that I think it broke 110 at around New York close, just on the mark. But this wasn't really a kind of an enthusiastic rally that you would have imagined. And here the question is, are we also coming up against some natural resistance here at this 110 level? We'll take a look at the charts in just one second. And last but not least, actually probably the most active currency next week will be the pound. We had surprisingly good news this week. All the PMIs were considerably better. All of them beat market expectations. So all three, the trifecta of perfection out of UK. That's quite surprising. And I think it's still pretty much a dynamic of the beneficial lower exchange rate with the full participation in the European Union. Whether that can continue forward remains an open question. What the Bank of England will say also remains an open question, because clearly inflation pressures are there. But I wonder if the Bank of England is just going to continue ignoring the inflationary pressures on the fear that if they even hint any kind of a tightening process, that could be very detrimental to the economy going forward. Cable, though, really inching towards that 130 mark, which is a huge resist point. And we'll take a look at those charts in just a minute. So let's just take a look at everything. So here's Euro. The interesting thing about Euro, and I've noted this to you several times, this is one of my favorite formations, what I call the volatility candle breakout. Last 4 or 5 days, small volatility, this is about 150% of the last 5 days average, ends up on the highs of the day. And as you can see, the bullish pattern, the bullish signal does continue. How much of a continuation there is impossible to tell, but the continuation signal is very strong when you have this kind of formation. So there's a reasonable chance here that we could go maybe 1050 all the way out. If we pull ourselves back to a weekly chart, we can see that the 110 is a very heavy. This is former support now becomes resistance, right? The 10 was a big support area here in July, big support area in April of last year. Sorry, this is July of 2015. In April of last year, it holds. In July, it holds for, this is weeklies, so it holds for a good month. The 110 gets probed a little bit, comes back up, and then the final sort of stab to the heart gets reversed over here on the ECB in November and scrapes its way all the way down to below 105. So now we've made the full 5 penny recovery move to the 110, but it looks to me like it's just technically there is quite a lot of overhead hang here. So we could maybe see 1005, maybe 111 maximum at this point before the euro, I think, runs out of gas. And there could be some natural correction going on. But in the meantime, I like the formation to the long side, at least for the next 50 pips, at least for our purposes for the next day or two as we start the week next week into a fresh week. Especially if Macron wins, there should be a mild relief rally, followed probably by then sell the news kind of a move that'll take us back down. Support here comes in. The immediate support is on 0950, the very strong support at 09. Euro could also be, I think, an interesting trade on a buy to dip story. If it comes into 109, I'd certainly want to be a buyer. We have a runaway gap. It's held for quite a long time. Generally, when you have a long held runaway gap, that's a bullish signal, not a bearish signal. And this could take months before it fills up. So if I'm a longer term position trader, I like buying the dips here on the euro for the near term. Now, yen, what's interesting about the yen is the fact that this, we've made a big recovery, absolutely. Made a 600 pip recovery here off the lows in the 108s. But now, similar kind of a story. Look at this 112. 112 was support in beginning of 2017, and support here, and now very likely this whole 112. Let's say if we're going to be liberal, I'm sorry. It's really 113 was the support, right? So 113, 114. This whole area here is pretty significant resistance. And I like shorting against this whole area. I mean, I like shorting with a stop above 114 because I think there'll be some kind of a reversion to the mean. I think there'll be some sort of a retrace back down. Perhaps the 112 support really comes in at 111 as the hardcore support. That's where the support should come in for dollar yen. So anywhere in this zone, to me, is a zone of mean reversion where it's going to start to roll over, and I want to be short this trade this week. Pound dollar is the final extension to this 130. Now 130 is super important. Let me show you the weeklies. You'll see how. Look at this. This was a massive shelf of support post the Brexit vote, right? And then it finally collapsed. It took us down to the 120s before it consolidated and took us back down to 130. So 130. So a full recovery above 130 would be a massive vote of confidence in cable, a UK economy, and everything else going forward. I think it's going to be harder than it looks. So I think 131 probably an area where I'd also want to be short cable with probably 132 stop. I would say. So what is this area? 133. It depends how aggressive and how much breathing room you want to give yourself. But if you're position trading, I like shorting above the 130s with probably a stop, I guess 133 as my target stop to see if we get another mean reversion move here as well. So that's the majors. There's a lot of interesting technical and fundamental cross flows coming up this week, and it'll be very interesting to see just how well these major figureheads materialize as we go forward. Wish you best of luck, best of trading, best of luck. Boris, over now.